Welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called Forecast Baseline Reclaim. This strategy is built around a least squares time series forecast, a regression line fitted to recent closing prices that acts as a low-lag baseline for fair value. Over the next few minutes, you'll learn how the strategy defines a trend using the slope of that line, how it patiently waits for a pullback, and how it enters when price reclaims the baseline. This is a trend pullback approach, and everything here is for education only, not financial advice. So what does Forecast Baseline Reclaim actually do? At its heart, it fits an ordinary least squares regression line to the last several closing prices. The default window is 20 bars. Instead of using the whole line, the strategy takes only its endpoint, the value of the line at the newest bar. Because a regression endpoint sits right on top of the freshest data rather than trailing behind it, it behaves like a low-lag estimate of fair value. The strategy calls this the baseline. From that single regression, 3 numbers are produced each bar. The first is the baseline itself. The second is the slope, which measures how much price is changing per bar and tells us the direction and strength of the trend. The third is a forecast oscillator, which is simply how far the current close sits away from the baseline, measured in units of average true range, so the reading adapts to volatility. The market is only considered to be trending when the slope, divided by the average true range, rises above a small threshold for an uptrend or falls below the negative of that threshold for a downtrend. When the slope is flat, the strategy stands aside. That filter is deliberate. It keeps the approach out of sideways, choppy conditions where reclaiming a baseline would carry little meaning. This is a trend pullback style, so it's aimed at traders who like the idea of joining an established trend after a temporary dip rather than chasing breakouts or fading extremes. It runs on whatever single time frame you attach it to, and it was designed with liquid foreign exchange pairs and index markets on the 15-minute to 1-hour charts in mind. As always, remember that trading involves risk, losses do happen, and this video is educational information only. Let's walk through the exact logic, step by step. On every newly completed bar, the strategy refits its least squares regression over the last 20 closes by default and reads off the baseline, the slope, and the forecast oscillator. First comes the regime check. The slope is divided by the average true range to express it in ATR-per-bar units, which makes it comparable across different instruments and volatility conditions. If that value is greater than the slope threshold, the strategy considers the market to be trending up. If it is below the negative threshold, the market is trending down. Anything in between counts as flat, and no trade is taken. Now the pullback. For a long, 2 things must line up in sequence. The prior completed bar must have closed at least pullback depth average true ranges below the baseline. That's a genuine dip beneath fair value, half an ATR by default. Then the newest completed bar must reclaim the baseline, meaning the forecast oscillator crosses back to 0 or above. In plain English, price fell away from its own regression line during an uptrend and has just climbed back onto it. Because the baseline is a regression endpoint rather than a trailing moving average, it hugs the current price closely, so a reclaim tends to be flagged early rather than several bars late. That combination, established uptrend, a real dip, and a reclaim, is what signals along. The short side is a precise mirror. In a confirmed downtrend, the prior bar must have closed at least pullback depth ATRs above the baseline, and then the newest bar must lose the baseline, with the oscillator dropping back to 0 or below. That signals a short. Risk is handled with the average true range as well. When a trade opens, the stop loss is placed a distance of ATR stop multiple times ATR away from entry, 2 ATRs by default. The take profit is then set at the reward ratio times that stop distance. So with the default settings, the target sits at 1.8 times the risk. The strategy holds only one position at a time, and if an opposite reclaim appears while a trade is open, it closes the current position and reverses. Every rule is symmetrical for longs and shorts, so the same idea runs in both directions. Here's the core of the MetaQuotes Language 5 code, the way it looks inside MetaEditor. At the top are the inputs you can adjust in the strategy tester. RegPeriod is the number of closes in the regression window, 20 by default. SlopeThreshold is the minimum slope in ATR-per-bar units. needed to call the market trending. Pullback depth is how far, in ATRs, the prior bar must sit off the baseline. ATR period sets the average true range window. ATR stop multiple scales the stop, reward ratio scales the take profit, and lots is the position size. Below that, two booleans define the regime. Trend up is true when the slope over ATR is above the threshold, and trend down when it is below the negative threshold. Then come the two signals. The long signal, long sig, requires an uptrend, a previous deviation at or below minus the pullback depth, and a current deviation back at 0 or above the reclaim. The short signal is the mirror, a downtrend, a previous deviation at or above the pullback depth, and a current deviation at 0 or below. When the long condition is met, the code reads the ask price, places the stop one stop distance below it, sets the take profit at the reward ratio times that distance above it, and calls trade.buy. When the short condition is met, it reads the bid, places the stop above entry, the take profit below, and calls trade.sell. Both sides use the exact same average true range distance, just flipped in direction. That's the whole engine, a regression baseline, a slope filter, and a symmetrical reclaim rule. Let's bring it all together on a chart. On the price panel, you can see the candles with the regression baseline drawn through them. That smooth line is the endpoint of the least squares forecast, updating bar by bar. Below the price is the forecast oscillator, which measures how far each close sits from the baseline in average true range units. It has a zero line in the middle, which is the baseline itself, a lower line at -half an ATR, and an upper line at +half an ATR. Those half ATR lines are the pullback depth. Look at the opening candles. Price is stepping higher, and the baseline is rising beneath it, so the regression slope is positive and comfortably above the trend threshold. The strategy now recognizes an uptrend and starts looking only for long setups. On the oscillator, these early bars hovered just above 0. Price is riding slightly above its own fair value line, exactly what you'd expect in a healthy advance. Then we get the pullback. One candle pushes sharply lower, closing well below the baseline, and on the panel the forecast oscillator drops beneath the lower half ATR line. This is the setup coming into place. The prior bar has now closed at least half an ATR below fair value, a genuine dip inside an uptrend rather than a full reversal, because the slope is still pointing up. The very next candle is the one that matters. Price turns and closes back above the baseline, and the oscillator crosses up through the 0 line. That is the reclaim, and it's where the buy entry marker appears. The trend was up, the prior bar had dipped deep enough, and price has just climbed back onto its regression line. All three conditions satisfied. The stop loss is placed 2 ATRs below the entry, sitting just under the pullback low, and the take profit is set at 1.8 times that stop distance, following the default reward-to-risk ratio. From there, watch price work higher across the next couple of candles as the uptrend continues. It extends further above the baseline until it reaches the take profit marker, and the long trade is closed for a gain in this illustration. Now the character of the market changes. Price makes a high, stalls, and begins to roll over. As fresh lower closes accumulate, the regression slope flattens and then turns negative, dropping below the downside threshold. The strategy now flips its bias and begins watching only for short setups. Here comes the mirror image. One candle rallies back up and closes above the baseline, pushing the forecast oscillator above the upper half ATR line. The prior bar is now stretched at least half an ATR above fair value inside a downtrend. That prepares the short setup. On the following candle, price fails and closes back below the baseline, and the oscillator crosses down through the 0 line. That loss of the baseline is the reclaim in the opposite direction, and the sell entry marker appears. This time the stop loss sits 2 ATRs above entry, just over the small rally high, and the take profit is placed the reward ratio below. Price then slides lower over the final candles, pressing further below the baseline until it reaches the lower take profit marker, closing the short in this example. Notice how the same rule set produced both trades. Join the trend, wait for a real pullback away from the regression baseline, and enter only when price reclaims it. That symmetry is the whole idea, and of course, in live markets not every setup reaches its target, and losses are a normal part of the process. And that brings us to the end of our look at forecast baseline reclaim. We covered how it fits a least squares regression to recent closes and uses the endpoint as a low-lag baseline, how the slope filter defines the trend, and how the strategy waits for a pullback and a reclaim of that baseline before entering, with symmetrical rules and average true range stops and targets for both longs and shorts. Remember, everything in this video is educational information only, and nothing here is financial advice, a recommendation, or a solicitation to trade. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like us to examine next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.